Hello and welcome to Stock and Roll, the podcast where we deep dive into the world of equity compensation. In this episode, we have Tor Daneshmand with us, CEO and co-founder of Amby, an embedded recruitment company that works directly within client organizations to build scalable hiring systems. We're having this conversation at a fascinating time in recruitment. The market has shifted dramatically since 2021, with companies adopting more conservative hiring practices and focusing on go-to-market roles over tech hires as they chase profitability. Obviously, we are focusing on equity packages in connection with recruitments. How are they being used as recruitment tools? What knowledge gaps exist from candidates? And how do expectations differ between mature markets like the US and UK versus the Nordics? Whether you're a founder trying to attract top talent or just curious about where recruitment is heading, this conversation has practical insights you don't want to miss. Okay, super happy to be here with another podcast. This time actually in Oslo and in your offices, Tor. So very happy to have you here. Letting you introducing yourself, Tor. Who's Tor and what is Amby? We get to get.
Do we go on the deep end on who I am? Personal note. I'm Tor. CEO, co-founder of Amby. Started a company back in 2012. Basically what I love to do is help founders and executive build teams and help them recruit top talent. And on Amby's side of things, like what we're doing is we're an embedded recruitment company. So basically what that means is that we offer a different recruitment setup than typical recruitment agencies. So we work together and embedded with the client when they're going through super scaling, basically. So we have a team of around 100 employees based in Oslo, Stockholm, Krakow, and also a big remote team. And we go in and help clients with anything related to hiring, anything from hiring infrastructure, setting up systems, tools, to the operational recruitment. So we do thousands of recruitment every year.
Cool. And to kind of even a bit deeper on it, like you say, like hyperscale, but who's your typical clients? What companies do you help?
I think we have, in terms of our ICPs, we have scale-ups, but we also have enterprise clients. So for scale-ups, we work with companies such as Remarkable, Kahoot, Unicast, Soneta, these type of scale-ups. For enterprise, we have larger logos, which we have some NDAs there, but but in general, big companies and enterprises.
Do you also recruit anything from companies that are outside Norway?
Yes, we do. We've been very fortunate, so we collaborate with some of the VCs out in Europe, and when they do investments, we come in as a talent partner and support them with their portfolio companies. So UK, Germany, and also some in the US, but majority of our market is Nordics.
Yeah, cool. And obviously one of the reasons why I wanted to talk to you is in recruitment, one of the things that we talk a lot about when it comes to equity compensation is how we could use that in attracting new talent, of course, like keeping existing as well. But today we're focusing a bit more on the attracting part. So if I start off a bit with a question on, first of all, like how do you see recruitment nowadays? Are there any differences in jurisdictions or like type of roles? Then I mean a bit like with the macro environment, you had 2021, 22, and then something happened. And where do you see it now?
Yeah, it's a great question. And I get that question a lot because we definitely see change. 21, 22 was crazy. It was booming. Now companies are more conservative, so we don't see the massive hiring roadmaps anymore, like the volumes of hires. We see a more conservative path to profitability sentiment in the market, and more, I would say, more adaptive and agile approach to hiring. So you're not planning for 1,000 hires this year. You're going quarter by quarter, and more focus on your runway, basically. Your question on the typical type of roles, yes, I think there are some changes there. I think more focus on the go-to-market roles, less tech and product hiring than we've seen previously, more on how can we unlock revenue and how can we drive growth.
Yeah. No, exciting. And I think like to many or to a big extent, like hirings and recruitment is a good kind of measure and on the sensitivity in the market. So it's you're quite on the
and I think just a comment there. I think we've seen very conservative approach last 1.5 2 years, but I think now there's slightly an uptick. So I'm hoping that we're seeing something now. And I talked to a colleague in the industry, and he said that we're now getting requests for UX designers. And he, according to him, and I do agree, that's sort of a good indication that things might be changing. But because we've seen that, unfortunately, UX has been under prioritized, and it's more of a nice to have than a need to have for some companies. So we'll see.
Yeah. It's a limit to how long you can hold your breath, and sometimes you just need to go back to making things work again. If we start off a bit like gradually kind of getting closer to the main topic, but then when you do recruitment, there's compensation is more than equity, right? Obviously. So could you kind of first of all, what in most of your recruitments, how do you kind of work with compensation? What sort of components do you see? Is it the same, or just like some top of mind thoughts on the full compensation package?
Thankfully, we have clients that are humble in a way, that they don't have like insights to the market. So we are very much a sparring partner with the clients on how to build the setup and the compensation package. And that's that's a separate discussion, but there's a lacking data in the Nordic market, at least in terms of what sort of benchmark, where is the levels, what should I offer, for example, this full stack developer or marketing manager. So we're lacking benchmark, and therefore I think our role as is more important, because we do see a lot, and we aggregate all the roles that we're hiring, aggregate that into database, so we have benchmark. But I think what's important is understanding the components, obviously. So you have the base salary, you have bonus, and then you have equity, and how those components play together and how you sort of orchestrate that is key. I think first things that we do is like look at the client's hypothesis. Do you have a realistic picture of the candidates that you want to hire versus the compensation that you can offer? Because sometimes we see clients trying to target unicorn hires, but they can't offer anything close to getting that type of talent. So I think managing companies' expectations is obviously key, something we do a lot. And then when we try to look at the different components, we look at, okay, if you're looking for a developer, for a scale up, or then obviously you want the base to be solid enough, because I would say now I'm just based on my own experience, I find it to be that, especially like for developers, they want equity, but like base is critical. It's key. It's expected, because it's such in-demand talent pool, basically. So they want that, but then they want equity and bonuses on top of that. For other roles, we could be a bit more experimental in a way, but that's a little.
And I think like also, of course, like we also see that you need a base that makes you able to focus on your work, right? You need to, it's not that easy if you go solo on base that you end up with trouble at home turf, and then you always kind of are struggling with working the extra hours because of you may have a balance at home as well. So I think like I fully agree and see that as well in our discussions.
And also like that's also changed a bit. I think pre 2021 or pre 2022, like the cool down in the market, I think a lot of people were a bit more flexible. If you think about that as a slider, equity versus base, there was a bit more risk willingness.
Yeah.
While geopolitics, interest rates, cost of living, basically,
Yeah.
and also a lot of these option programs have taken a hit. So candidates are more aware of the risks involved. So base is also something that they're looking for.
Yeah. Do you see any when it comes to the compensation packages? Do you see like, is it a big difference if you are called like a developer or a salesperson or a person in the executive management? Is it like different ratios to start off with?
Yeah, I think we don't have. I don't see like a clear, okay, 70% this, 30% that.
No.
But I think for like what's very clear is like for sales, because it's so quantitative, and the industry works like that. The base, of course, like hygiene factor needs to cover and be attractive enough to build security, but they really push for the bonus and the OTE for the OTE to be high. Of course, they want the equity, but they also want to get that sort of rush when signing a deal, and for them to don't be capped, for example, for their bonus setup or commission setup. For developers, as mentioned before, I think it's like they need that balance. They need for the base to be high. For upper management, it's a bit, I would say, life phase and situation, because I've seen the whole spectrum of risk willingness. But of course, with mid-management or senior management, when you move upwards, and with seniority, you're in different life phase, and then that sort of slider, it's dependent on your risk willingness and situation, basically.
And I assume also on the equity part, stuff that we obviously like come across quite often, it's like, what is the expectation, the expected payout of the equity part? Because if you give away 0.5% of a company, and the strategic goal for the investors and the founders are, let's say, a 50 million euro exit, or if it's a 1 billion euro exit, obviously it depends on how you weigh the likelihood of that. But that part as well, it's a bit like people have different perceptions of the same package. So I guess that part as well, it's something that will affect your willingness to give away something now versus some potential in the future.
And the communication there is key, right? It's just sort of ensuring that they understand, like, okay, what's the potential? Is this a life-changing event if this happens, right?
No, definitely. I think that takes us a bit into the equity side of it. So if we start off, like, how common would you say it is that equity is included?
A bit dependent on the company. For startups and scale-ups, I would say the majority of processes, basically.
But do you still see cases where it's not included, or is it like
Yes, I do that as well. And I've been asking myself why, in a way. Especially with like VC backed or that type of profile, ambitious scale-ups. I think it's a combination of, I don't know, founders that are a bit sort of more conservative with the payout side, and like what they want to see, and maybe they want to see or introduce a stock option program when they've checked the quality of the candidate. And secondly, might also be because of time, basically. And like this, setting up a stock option program or whatnot, it's a barrier in terms of time and complexity and whatnot. So sometimes it's just sort of, we'll figure it out later. But I think if you want to really drive motivation at an early stage startup, then you need to get that sort of sorted out. I think it's key.
And how about the enterprises that you work with? Is it something that is part of the stuff there, or more rare?
It's, I would say, more rare. We see it sometimes, but it's not really a selling point.
No,
like they're just sort of using you will be enrolled in this program, basically. And it's super ambiguous.
Definitely.
And difficult to understand, like, what's the value of this? So no, we don't. I don't know how common it is, because we're not seeing it that much upfront in the recruitment process, because it's very under communicated.
We see a bit, like we obviously work with, I know that a few of your enterprise clients are also clients of ours, and what we see there is typically like there are some, but that's on the absolute management side, have like LTIs and kind of rich programs. While the ones you talked about, you will be enrolled into, that there are some like annual share purchase processes that you will be part of, but that's like almost similarly communicated as the pension scheme, right? It's something you come into, and it's not like why you start there. So it's
It's I agree. I felt it's the same way. My partner works in Schibsted, and she also was part of one of these programs prior to the exit and the restructuring that they've had now. But I think for an employee that's not into like this space, it's super difficult for them to understand what is this. So like, okay, I'm buying a share and getting a share. Like, how does this work, basically?
Definitely. And do you, like we just touched a bit upon options and with like buying shares. Do you have any feeling of, is it mainly options or is it other instrument types?
I think what we, especially in the startup and scale-up space, what we're seeing is like a very American type of model, 4-year vesting, 1-year cliff, traditional sort of option programs, basically. We do work with some of these consulting firms, and there we see more direct setups where direct transactions where they can buy shares in the company. And then we work with some PE-backed companies, and there we see more on trying to mimic shares in a way. Like there are some management incentive programs where you see a combination of bonuses and equity and a mix of things into the setup.
And in the recruitment stage, when do you typically start focus on these things? Because what I find a bit difficult when we hire in Optio, right, is that it's a part of your offer, but do you sign it up front even before, or kind of how and when do you introduce it? And since you're kind of external and then kind of or embedded recruiters here, it's like, when do you advise to kind of put this forward and
I think for general compensation, like the base salary and the levels, we want to front load that as soon as, like, bring it up in the first conversation with the candidate. Because we don't want to waste time. If not, we're just sort of not being productive, basically. So definitely something we advise to bring up. And also EU Transparent or Pay Transparency Act is coming. So compensation, I think companies need to be more transparent about that. But when it comes to equity, I think that's a different setup in a way. I think here in the Nordics, we are saying that, okay, you will be part of a equity program. And we're not going to the details of that. Because I think the setup is different in the US and internationally, because they have benchmarks. It's industry standards, while here in Norway is like, okay, most important is the compensation, like the base salary and whatnot. Like I have that covered. And then for the equity part, that's something for us to discuss at the later stage. But especially for senior management in early stage startups and scale ups, let's say you're jumping from the MBBs, like the McKinsey, Bains, and BCG. You know how to run Excel, right? You know how this works, and you want to like really understand what's the value creation. Like, how can I get the most out of this deal, basically? So, dependent on the role, dependent on the market, but in general, like here in the Nordics, we say that it's an equity program, and then the details are carved out in the final stages of the process.
I follow that, because I guess like some of the people, they join because of being a part of the equity, and that could be like the typical people from McKinsey, Bain or so, because then like the reason why you leave that is to kind of become a part of value creation and something. And then of course it's a key thing. I want to have X percentage of the potential upside, and you understand the likelihood of that upside to be realistic.
Because it's like it's a real trade-off from a solid base salary to maybe taking a hit there, but then the upside needs to be substantial.
This is a question that may be a bit hard for you to answer, because I guess sometimes that's more of like a founder management to hire question, but it's like, to what extent is it communicated? Now I talk like startups and growth companies. the goals of the company? Because obviously when you're into equity compensation, it's like if it's a flat growth, or meaning no growth, it is, of course, very limited. But if you think that this can go from being a small company to a unicorn, the payout is like two different worlds. So how, or do you have any kind of feelings on how this is communicated? Do they communicate the risk? Is it like all out ballsy, this is what we want to do? Because this is very difficult, right? Because this is kind of, this has the impact on the perceived value of the entire package.
I agree. And I think we've seen a shift there, to be honest. I think from the 22 being very aggressive. And I think, I don't know, we definitely see that companies are, especially scale-ups, as you mentioned, when they pitch the direction of the company, they are talking about like, okay, we're going in here and here. They don't often talk about the exit situation. As more implicitly that like they're talking about like, we're going in this direction, we're going to grow by X and we want to go in that direction, but they're not saying there will be a market event, or like we're going to do a transaction in 5 years time. Because that's, I don't know, if we're trying to build something like world leading, that's more inspirational for the candidate. Of course they want to think about like what's the gain, but I don't think we don't see that too much. They're talking about like, okay, come in here, we'll sell the company in 3 years. That might be more in other types of roles, in other personas in the market that might be looking for that type of information. So I definitely think that companies have become a bit more conservative when pitching that. I think, with the situation of Oda here in Norway, there are employees that have been scarred by this and overselling. And I think I can speak on behalf of myself, like we had the growth trajectory that we had and the momentum we had in 22 was very different. And we've had some transactions internally with partners coming up and being a bit too ballsy about our ambitions. I think it's because, especially with our setup, you put money into the company, and then the valuation needs to reflect that and the momentum that we have. But you can't be too aggressive in selling that story. People are taking their savings and putting into the company. So
I think this is perhaps the most difficult part, right? Because it's like, let's say if you recruit top execs that should be part of like really creating the momentum of the company, you kind of need to sell them the dream that you have in your head as a founder. But you really need to also say that this is risk adjusted. This is my risk profile. You should find your risk profile. And then saying a bit like, okay, if we reach a 200 million valuation, this is what you will get. If you reach a 1 billion valuation, this is what you will get. But you could also say it's a, let's say, 20% likelihood of the first and a 1% likelihood of the last one. And there's a lot of scenarios where we're not happening there. But this is what I, as a founder, you as a founder, think like, if you manage to get that in the right way, and then the risk profile of the person and the perceived value there, I think that is stuff that we are playing a bit around with. Like, how can you do this where you give as much insights as possible, but not in a exaggerated, no risk sense where you just cheat people into your company because of its but I still think it's important that an equity package is a result of a qualified perception of what it could be like, and how do you make that in an early stage already, because then it can be such an extremely powerful tool in the recruitment side, especially on top execs. But fully agree with you, like there's a lot of examples lately where people are a bit burned. And that needs to be taken into the consideration. Otherwise people will.
No, but I like your approach there where you talk about like, this is the playing field. And my risk level is here, your might be like elsewhere, but this is what we want to achieve. This is what you'll get. This is sort of the scenarios, bull, bear, normal state basically. So, and just sort of say that we don't know what the future will hold, but like, we want to achieve this, and this is what life could look like. And up to you to consider, like, how do you view this risk? So transparency in context is key.
Definitely. And then obviously we're trying to get the people from the McKinseys and Bains to work in growth companies and startups, right? So then it also needs to be we can't compensate with the same amount of money.
No.
And then you kind of need to find that balance. But I think this topic there is super interesting. We're having another podcast where we're discussing perceived value of equity instruments. What is it actually worth, and how does that your status, your home situation, where you live, kids, not kids, where you are in life, like how will that impact the perceived value of what you get? I think that topic is
yeah, and that's what it's all about, right? Because these setups are to, of course, like share value, but it's also to drive something, to either drive attraction or retention of talent, and the perception is the experience for that person.
Definitely, yeah. And that is kind of fresh goods. So if one thing happens, then it's suddenly not worth that much anymore. So,
Oh, super interesting.
Yeah. So I think we touched a bit upon like, or we can. Do you think that people are understand it when you talk to them or candidates? Obviously, it's a bit different what kind of people, but the general feeling, do they understand it?
Good question. I think in most cases, yes, they do understand. They don't understand the full complexity of it.
No.
And I think that's something that, because there are different programs out there, and people might move from one company to the other, might be shareholder agreements, might be option program, I don't know, descriptions or whatnot. And I think where they understand maybe 70% of it. And there's ambiguity on the rest. And some don't understand at all, basically. But they understand there is some value there. So I think there's a big spread, and I think that's extremely important for companies to take that seriously and to close that knowledge gap. Because if people don't understand the full setup, or they don't understand, but then back to perception, right? It's like, what is this? There's something there. Like, and what you want to do is like, you want to drive behavioral change. You want to create engagement. You want to create a team that drives in the same direction. And if people don't know and don't understand, then invest your time there so that people really do understand. And that's kudos to your product, like showcasing value of.
We also generally say like it's a bit like when thinking as a founder, you don't want to waste your shares. It's super important. It will always be important, regardless of what sort of company you're kind of running. So if people have a much lower value, it's perceived value, because they don't understand of your shares or the company's shares than you should just keep it and pay cash. It's a lot better. So it's like, even though we are very, of course, like equity and we preach the equity story, I think it's like there's this trade-off here. So it's rather just buy back the options or buy back the shares. If they value this nothing, you can just increase the base salary. You can just raise money and or sell the shares to someone that really understands it. But of course, as you say, you need to invest time in explaining this, because it's often that's where the problem lies. It's
100%.
Market-wise, like, do you see any geographical differences where you recruit? Let's say it's a Norwegian company that recruit people from Europe or from US. Are there any different expectations when it comes to equity?
I think we have more, like, the more mature markets, US, UK, candidates are more aware about these programs. They might be pushing more in negotiations. And maybe also expecting more and doing their due diligence a bit more than Norwegian candidates, because we're such a young ecosystem of startups over here. So that's, I think, also the buyer and the candidates in this case is also uneducated or uneducated in this space. So I think the sophistication of the question, the quality of the questions, the due diligence on the candidate side is a bit more developed in the international markets. In terms of their expectations being higher, I don't have enough data to say that, okay, we have higher expectations. What we do see in terms of total compensation is, like, with the depreciation of the krona, with the increase, like with the cost of living here in the Nordics, the candidates, they need to see something else than like a decent base pay, because so that's a good way of attracting. That's maybe a position there for scale-ups to take if you want to attract international talent.
Yeah.
Then be a bit more liberal and flexible with your equity setup.
Yeah.
Because the base or OTE might not cover it or make it interesting enough. So hopefully we'll see a development there, but in terms of the currency, but I don't know what the future will look like.
No, definitely. I think that definitely makes things a bit sometimes more challenging for Norwegian companies, especially to recruit in other jurisdictions now.
Yeah, and also like with the global mobility, and we see, especially with remote work, that's also had its impact.
Yeah.
Back in the days, we hired a lot of candidates from Poland and from Romania and Eastern Europe, and traditionally like more low-cost countries, but with fantastic talent. We relocate them to Norway. That's not happening that much anymore.
No.
Because they're working with US-based companies and they're charging US fees or hourly rates, and then why would they move basically? So I think equity could be a super instrument to get those 10x developers on board.
Yeah, no, definitely. I think that's and those also tend to be interested in these things as well. So it's definitely something we see. Getting a bit closer to the end. I'm just a bit curious about, like, it's always a bit up to how we do things the way we do. Since you do also hire quite a lot of people for others and you hire people for your own business, how do you do these things in Amby? Do you, and then like kind of equity's role in the total compensation and how would you communicate it?
Yeah, it's a good question. I think we've tried and failed a bit on this. I think for total compensation, like we're a consulting company, so it's a combination for people working here of base salary and also commission. They're invoicing hours, they're charging the client. It's natural that they take part in that value creation, basically. And then we have equity for partners, basically. So not for the whole company, but the classical, more traditional setup where people work here, they get promoted and all the way up to partner. And then as a partner, you can buy shares from the company with these models that we have in Norway, where we see a different like it's very different buying shares now than it was 5 years ago. So the early stage partners, of course, get more of the company because we didn't have the same type of valuation. But now, lately, we've seen challenges with the model, and that's why we're also now looking at restructuring it. So with partners, you get X% of the company, but now it's getting more expensive, and then because you need to buy it, then like not everybody's in that position to be able to have cash to fuel it in, of course, with some credit from the company to make it happen, but at the same time, it's a substantial investment. So that's sort of one problem that we're seeing with the current model. Second problem is also that as a partner, you're also very reliant on the company's financial performance, and your compensation package is not weighted in the same way as if you were an employee. It's less reliant on your individual contribution, but more on the company side. And in bad times, last 2-3 years or 2 years, obviously we've been profitable, so that's been good, but it's not been like the heydays. Then of course partners that are bringing a lot of business and momentum, of course you're disappointed if the company is not performing. So I think we see the need to like reshuffle and rebalance it in a way, and then that's why we're also introducing more profit sharing elements to it, which is more bonus setups, but also a bit dependent on seniority and structure. So we're in that sort of redesign phase now of the setup. So I can give you an answer in a year's time to see if that's been the right play, but I think it's a better balance between like base salary, commission, profit sharing, and hard equity, basically.
Yeah, I think one of the challenges we see in companies that have been growing and that are more mature, and when they do kind of offer to buy shares, especially in bigger cities, if they live in bigger cities, right, they have quite a high cost of living. And then you get the ones that have been there for a while, the ones that are kind of more settled, that have some extra cash to invest, and that's not one-to-one with the ones that you want to have call it like skin in the game and be a part of it, and especially like younger talents, it may be quite hard to get them to invest and kind of have retain. And so it's like finding that balance. It's always super hard, and there's no perfect model for everything, I guess.
No. I think we've learned a lot last year, and I think moving forward we'll see if we need to do further iterations to the model. But for now, I think it's. I think we're on to something. Most important thing is that we get like collectively that we continue to grow and create values, and then the ROI on that will follow for partners and for the company to reinvest in growth.
Great. I think that was my last question today. So first of all, it's been great talking to you. It's so nice to kind of have someone from the recruitment side as well, which is a bit like different than what we see. And again, thanks a lot for joining, Tor.
Thank you for having me. It was a great talk.
Thank you.